Hey guys, Max here, and yesterday was another volatile day for the markets, with most equities being red for the best parts of the day before rallying near close and ending up green. In reality, not an awful lot happened yesterday itself. We just saw some investors mostly continue to try and price in news that we've had for a while now. Some investors panicked, some got bullish, but nothing really concrete happened. But the markets themselves, what happened? Well, the S&P 500 rose by 0.5% for the day, the Nasdaq 100 rose by 0.2%, the Dow Jones was up by 0.3% as well, and the Russell 2000 broke the trend of US equities and fell 0.3%. It wasn't exactly a stellar day for US equities then. Small cap normal businesses were down for the most part, but the large cap listed companies were up on the whole, although only slightly. It was volatile, as I said, mostly red for the first half of the day, and then it swung up into the green as the day progressed. No one seems quite sure how to price things right now. Now, why is that? Well, as always, there are fears of a few things going around. The first one is of COVID and the potential of another wave with a new virus coming out of China. I think this is pretty unlikely, to be honest, and the mainstream media has a habit of overhyping these new variants from foreign countries, but it's always possible, of course. The war in Ukraine might be getting worse, it might be getting better, who actually knows at this point, but more on this in a moment. And then, as usual, we have the Fed's actions and recession risks to make things worse. Now, there was actually a new development regarding the Fed and what they intend to do, as St. Louis Federal Reserve President James Bullard came out and said that he'd like to raise rates to 3% in the second half of 2022, meaning, of course, before 2023 starts, which is a pretty aggressive rate hiking schedule, and that is worrying for markets. Now, that would require multiple 0.5% rate hikes, and every month in the rest of the year would need to see a rate hike as well. This would almost certainly tank markets, to be honest, so investors are understandably worried about hearing this from him. On the other side of this, though, Bullard is one of the most hawkish Federal Reserve presidents. He has been talking about raising rates aggressively for months now, and every time it comes down to a vote, everyone else votes against him. So just because this is what he wants and probably what we need as well, it doesn't mean it's actually going to happen. We also heard from the Chicago Fed President Charles Evans and the Atlanta Fed President, who both want to raise rates to the neutral level in 2022 while continuing to monitor the economy as they hike. Now, the neutral rate isn't actually a set number, it's the supposed level of interest rates that doesn't slow the economy down, but also doesn't speed it up, and no one knows exactly what this specific level is, but the consensus right now is that it's probably around 2.4%, so another 2% of rate hikes for this year, according to the dovish side of the Fed, still not a small amount at all. The thing the markets like about this is the specific caveat that those two Fed presidents made about monitoring the economy as they raise rates, which gives credence to the idea that if rate hikes does damage the economy, the Fed will readjust its position. Now, the markets are probably hoping that in reality, the Fed won't watch the economy to gauge that, but the markets and asset prices instead. So if the Fed tanks those markets, there's a chance and a hope that they might be enough to change the Fed's viewpoint to keep the money printer churning and the bull run marching forward. The thing to watch for, in my opinion, is the rate at which the Fed chooses to offload its balance sheet, as that is going to have a monumental impact on fixed income assets or bonds, and the effects of that will ripple out across the rest of the markets too. Now, speaking of bonds, how did they do? Well, prices fell and yields rose once more. The US 10-year Treasury yield saw another very high mark of 2.64% after rising 5 basis points. The German and British 10-year yields both rose 3 basis points each as well. This is the same thing that has been happening for months now, just outflows from the bond markets to price in interest rate hikes and higher inflation in the future, leading to yields increasing. Now, gold stayed pretty much steady once more, holding firm with a small increase to $1,935 an ounce. Now, in the world of crypto, not an awful lot happened, and most coins were quite stable, albeit with some small gains. Bitcoin is just under $44,000 right now, and Ethereum is just under $3,300. Altcoins seem to perform well for the most part, rising a couple of percent each for the day, but most didn't see any major moves. The NEAR protocol did actually see a pretty significant pump up, 26% yesterday alone, so I might make a video on that if you guys want, so let me know in the comments down below. Now, energy actually saw a big development yesterday as the EU banned Russian coal imports, sending prices of coal across Europe soaring. This is an example of those stepped up sanctions as a result of the war crimes committed by Russian forces. It isn't necessarily a huge impactful sanction, but the idea is that every little helps. Coal is, of course, a commodity that is actually quite easy to import from anywhere. It isn't like natural gas where you need dedicated pipelines, so banning Russian coal means prices go up, yes, because the supply is limited, but there isn't going to be a shortage of coal like there might be with natural gas across Europe. Now, the other big thing with energy yesterday was the International Energy Agency announcing that it would be adding 240 million barrels of oil to the global supply following the war in Ukraine. Now, this is more than the US is planning to release. They are only planning to release 1 million barrels a day over 6 months, which leads to 180 million. And this is also far more than any other state is pledging to release, so this should help to bring oil prices down. Now, over a week ago, when we got news of the US releasing oil, I said that action on its own probably isn't enough to drop prices by all that much, but if that action is matched by other states and organizations, then it could be enough, and that's what we've just seen happen, with the UK releasing oil reserves first, following the US, and now the IEA following that trend as well. As a result of that, oil prices have fallen a little bit further. Now they are sitting at $97 a barrel for WTI crude and $101 a barrel for Brent crude. Hopefully, we see those numbers continue to fall. Finally now, the war in Ukraine is looking like it's on a bit of a knife edge and no one really knows where it's going to go next. Russian forces have finally and fully retreated from Kyiv, Chernihiv and Sumy entirely and pretty much just allowed Ukraine to have all that ground back after failing to take any major settlements in the north. I covered this quite in depth over the last few weeks, actually over a month now, with some specific videos on Ukraine, and I might do another one over the next couple of days, as this does seem it's likely to be a turning point or a new phase in the war. Now, Western intelligence is now reporting that those Russian units that have fallen back, they've fallen back into Russia or Belarus itself. They are regrouping, rearming, reorganizing, and most importantly, redeploying to the east of Ukraine to start fighting in the Donbass again and in the south as well. Now, the simple truth is here that we do not know how intense the fighting is going to get over there. The Russians have taken an insane amount of casualties, well above 10,000 soldiers killed and probably 4 times as many wounded. It is now abundantly clear that the Russian plan just didn't work at all, and we are really just waiting to see what they go for next. This could be a de-escalation of the war by Russia. They may be content with just trying to hold the land they took in the south, or they may start intensifying the war over to the east and in the south in an attempt to actually see some successes from what is otherwise a disastrous campaign. Now, should it stay quiet like it is right now for the most part, markets will like this, at first at least. The problem here is that Ukraine has actually shown a willingness to seize the initiative, so it is possible that Ukraine intensifies the fighting in that direction. They are getting more and new equipment, including anti-ship missiles from the UK, which could be very influential. Over the last couple of weeks, they have been launching counterattacks against Russian forces to some decent levels of success, and they even sent those 2 helicopters into Belgorod and attacked Russian supplies as well. In short, right here, we should expect markets to wobble a little bit if the war does accelerate in this region. They want peace and no sanctions, and as fighting continues, companies continue to suffer, they lose cash flows, and that will affect the markets that is underpinned by those companies. Really, we just have to wait and see here what happens. But if you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, so if that sounds interesting, make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Thank you all for watching. Stay stoic. Until next time.